Greetings, Dr. Jeffrey Scott here. This is my weekend market update for July 23rd, 2023. My email address is hgsidoc@gmail.com. If you're new to the channel, hit the subscribe, hit the alarm so you know when I do these. I do them whatever time works on my calendar, and occasionally I do things intra-week as well. And I will answer your remarks as long as they're constructive, positive, and negative, whether you email me or put them on YouTube. For those that have wealth charts, I will include in the remarks section the code for my combo rank list, which is just a top, say, 800 this week of stocks that looked interesting. Let's go ahead and get started. I call this market rotation on weaker tech earnings. You know, it's funny, as I was sitting watching the market on Tuesday, watching CNBC, it was one of those days where it looked like the market was really being hammered. And then when I looked at the internals and breadth, there were plenty of stocks that did well. So it was really the high profile, large cap. And in fact, on the week, the mega cap stocks were down while the rest of the markets were up. As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. I have tools now for a number of platforms. I've paid for those tools to be developed, and no one is paying me to say good things or bad things about their products. Trading involves risk, and you are solely responsible, excuse me, for any investment decisions you make. For those that are new, I always start out with a market update to give you a sense of what I think the market is doing, and then I will jump into the software. I use wealth charts for the wealth charts version, which is this one, and I'll take a look at the markets from a top-down perspective, show you how I use both the tools that I have customized inside wealth charts as well as the program as a whole. So this piece takes usually 20 minutes and then another 20, 25 on the markets. If you like what I'm doing, but you don't really want to spend this much time, I get it. So Monday through Friday, I will post at stocksanddocs.com a 5 to 10-minute video that summarizes my thoughts on the market and usually highlights one or two stocks that I will be following. So I like to start with the major markets. In yellow are the major indices. And let's look over here on the right, because notice anything in common among these six major industries, ignoring the SVXY in the middle. And what you probably should notice is that since the October 13th lows, essentially everything is in a bull market except for the Russell, which is 0.3% away. And the way the market's been going, it might hit that on Monday. So as much as I might be less excited this week than I was a week ago, this is a rip-roaring bull of pretty significant proportions. And if you think about it, how many years have you seen the NASDAQ go up 47%? If you look at the week that was, the NASDAQ and the Qs were both down a little bit less than 1%, while the market was led by the Dow at plus 2, Russell plus 1.5, and the broad-based NYSE composite at 1.6. So it's a rotation market because up until recently it was those Qs in the NASDAQ that were leading. If we look under here, you can see the laggards on the week were really communications and discretionary. And because technology had a pretty good start to the week, they were actually still positive 0.1%. Now, if we look at the market on Friday, you could see we still have 15% plus of the stocks above the upper Bollinger Band. I have a small mailing list of folks that asked to get on that list. And I actually sent something out before the market closed on Wednesday saying, hey, we're about 26% above the top of the Bollinger Band. It might be time to start taking some profits. And that's a intra-market view of the buckets, which I'll talk about later. I love the tool. This is Q Edge. 80% of the stocks are above the midline, the S&P 1500 of their Bollinger Bands. Extremely bullish. So even though this market, quote unquote, had some weakness in it at the end of the week, overall the market is doing fine. You could see on Friday 2/3 of the sectors were down, half the industries and half the stocks. That means about half the stocks were up. In red, you could see Friday, in green Thursday, and you could see on Friday defensive stocks such as utilities, healthcare, energy were up, and staples on Friday were pretty much flat. Now, the comment about the market as a whole is stronger than it looked. Take a look at the 5-day move. So this would be Monday, Tuesday, Wednesday. This would be Thursday and Friday, and this would be Friday. Over 5 days, almost every sector was up. 69% of industry groups and 68% of stocks. So although we've weakened going into the weekend, this was still a very strong week. Over 10 days and over a month, this market has been roaring. Now, my weekly timing system, which I do in wealth charts, which requires two things: a weekly bar to close above the 30-period WMA and the weekly bongo to be green. Since it's a weekly chart, if you see one bongo, it's the duration of the chart. And you could see each of the major market ETFs are positive and none are questionable. So we are still in a long setting. And, you know, my conviction is lower, obviously, watching Thursday and Friday. But more importantly, looking forward as to the news this week, I think we have to be careful. Rates were mixed into the Fed. You could see the 10-year rates were up 0.47 and the third on the weekly, and the 30-year was down 0.41. I think we're waiting to see what the Fed does. Everybody expects a 25 basis points hike on Wednesday, but it'll be interesting to see what the commentary is about what comes next. Recession in our near future. I became less bearish about this over the past month or so. Yes, every time the 10-2 or the 10-3 inverts, you're likely to see these gray bars, and those gray bars represent a recession. I'm looking for strength in the TLT versus the spiders, which I haven't seen, which tells me it's not imminent. I might look at credit tightening, which is not occurring right now, and the Philadelphia Fed diffusion index, which got below zero point 0.2, which is associated with recessions, is back above that. So I think my thoughts on recession today is, do we get one ever? Absolutely. They always happen, given enough time. It'll be interesting to see. I mean, the third year of the cycle, which we're in this year, is usually the best. Hard to imagine Congress coming up for election in an election year, which is next year, not flooding the market, trying to avoid a recession. So I wonder if the recession is just going to be pushed off to the first year of the new term. Certainly could happen before then, and I think, if anything, this data suggests to me that it might be a shallower recession than we might have thought. Breadth improved despite big cap weakness. Look at in the white, the number of stocks above the 200, the number of stocks above the 40, which is getting to nosebleed territory, by the way. The 12-week new high, new low, which showed you a peak 2 weeks ago, last week. Um, Actually, 2 weeks ago, sold off, improved this week. So breadth actually improved. The buckets here, 79% above the midline of the Bollinger Bands for the S&P 1500. Number of stocks above the Bollinger Bands, which is much smaller. All right, I hope I didn't lose audio for any length of time. I had a battery go out. I got to be more careful about that. It happened at Wealth 365 as well on my headset. All right, new battery in. Hindenburg omens. Of course, we don't expect one in the setting of not being at all-time highs. However, you occasionally get them during market volatility. Notice on both the NASDAQ and the NYSE, lots of green for new highs and no red on new lows. This is a very bullish picture, in my opinion. So again, even though top line weakness, especially on the NASDAQ, underlying, there's still plenty of strength in this market. Now, this is a test, or a thing called the group performance. Nope, not the group performance. This is the warehouse view, sorry, in EdgeRater, where I assign every stock an ERG. And ERG is related to EPS rank plus relative strength rank plus group rank. The best performers have high ERG. The lowest performers up to now would have low ERG. What we saw this week was the low ERG stocks actually outperformed the high ERG. This is market rotation 101. You could see earnings really did not dictate the performance on the week, and The lower the relative strength, the better you did. Market rotation. The worse your group rank going into the week was, the better you did. Market rotation. So this week, you have to know your news and earnings as much as any date, perhaps more than some. There is massive, massive earnings this week. You could see here a full house, whether we're looking at regional banks, Microsoft, Alphabet, Visa, 3M, AT&T, boy, is that a weak stock, Boeing, Coke, eBay, Lam Research, ServiceNow, Chipotle, McDonald's, Southwest, MasterCard, AbbVie, Intel, Roku, and then on Friday, Exxon. Somewhere in there, there's a Meta. So we'll know a lot about big cap tech when this week ends. Not that this is just about earnings this week, but it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So, how about news? We got some PMIs on Monday, Case-Shiller on Tuesday, and then on Wednesday we have the FOMC decision at 2 o'clock and Fed Chairman Powell press conference at 2:30. We got jobless claims and GDP on Thursday, and then here we go, folks. PCEI, which is a closely watched Fed inflation indicator and consumer sentiment on Friday. This is going to be a doozy of a week. So Dow led markets higher while large cap tech led by the NASDAQ and Q to a weekly loss. Mega caps were the losers. Markets broadened out and small cap IWM has neared bull market status off October lows. The equal weight QQE and RSP actually, for the first time in a long time, outperformed their cap weighted peers. I think that is a bullish thing if that continues. We talked about what's coming this week, so there's certainly an opportunity for some massive volatility. Tough week for the bulls to stick the landing, but perhaps the most important comments will be the forward-looking Fed thoughts on the additional rate hikes. A 25 basis point, not cut, I fix that, hike is already factored in, and based upon recent inflation numbers, it is hard to believe the Fed will be more aggressive. So I think that's baked in. Hopefully the Fed will come out and say, we're not sure what happens next. We're data dependent. Um, if there's a lot of them saying at least one or two more hikes, that will be bad, I think, for the market. I think the market's expecting no more than one additional after this 25 basis point. Thanks to all that joined me at Wealth 365. I know I was supposed to be doing this Saturday, the 22nd, a live web training, but I believe Ziad has scheduled the day and we didn't want a conflict. So I'm going to push that to the 29th for marketplace owners. Daily updates at Stocks and Docs. And if you want to purchase my tools that I'm going to be using shortly in wealth charts, email me at hgsidoc@gmail.com and I can give you information. If you're thinking about it, I can probably get them off cycle. Usually we do it during the Wealth 365 events, but it might be good to have before the July 29th session. Again, that's only for the owners of my wealth charts tools that on the 29th. So now let's go to the charts. Looking at scheduling something not next year, but actually in December in Florida. Typically, it'll follow the John Person seminar, which is in early December. I should have more information about that shortly. Always enjoy standing up and presenting how I trade and some of the things that I've learned from people that have taught me over the years, and I enjoy doing them live. All right, so let's go into wealth charts. So let's start with hot stocks. And the reason I'm starting in hot stocks with my ETFs is just to get a sense of what things had a lot of movement on Friday. And I think the story's pretty clear. It's defensive. Staples, pharma, biotech, and the dollar. The one that's most relevant, I think, is XLP, as it's got the highest wealth score. I look at the indices, and I look at the same thing each week, and frankly, each day. Lines that I think are important, I leave on the chart. So if we look at the spider, which obviously we know has come off the highs of early 2022, bottomed on October 13th, has been in a beautiful uptrend. It took out sort of a little flag here. Now, if I want to be bearish, we could talk about 2 down days, although it was kind of flat on Friday. But in reality, we're just pausing to refresh here. And so until I see something more nefarious, it's hard for me to get really negative about this market. Um, Sideways move, theoretically, we could basically pull back to this 50 and still be healthy. But right now, we're just going sideways. I'll put that in the neutral. The Qs. The Qs are the ones that are at risk here, but what is the likelihood place to stop? They could bounce here, which is where we gapped up. Do they fill the gap, which is not very far? Do they pull back to the 50, which will hurt, but it'd still be about $360 on the Qs when it hits that. That one's important to watch. That one was the one down the most this week. Now, if you watched my stocks and docs for Thursday morning, we talked about how Wednesday's candles were indecision and that I was looking for long down days on Thursday, showing me that the market has at least an intermediate top. The Qs might be there. The diamonds broke out of this resistance area and really have been leading the last several sessions, and they were um, down a few pennies here on Friday, but on the week they were up. And I think on Friday, I have to go look. Let me hold on a second. Let me pull up something else to see exactly Fridays. Sometimes the after hours and the diamonds on Friday. That's the weekly. Yeah, they were down 0.1%. So that's actually true and not after hours. So down just a teeny bit. The Russell broke out above its resistance. This is the anchored VWAP going back to January 2022. Has a couple big down days, but really was only down 0.32. And if you consider this was the Monday bar, it had a nice weekly move. Now, volatility, we can look at lots of things. Let's look at the VIX. Let's see. That's Friday. Yep. You could see the VIX was actually down 2.79. So again, big cap stocks that drive the indices were down. Yet when you look at the broader markets were stronger, and thus the VIX was down. Dollar has been recovering. Ultimately, that could become a headwind to stocks up 0.29. And if you look at the week, you can see a pretty strong bar here, but we're well below the 50, and that's the point that might be a risk of failure if the dollar continues to go higher. Commodities, weak dollar, stronger dollar, you'd expect gold to be down. Gold is at a place that might be a bounce area on the 50 with the doji. Silver was also down. Look how high above the 50 it is. Oil definitely had a bounce this week and was up 1.38%. And on Friday, flat on UNG, but on the week, UNG actually picked up some. And then if we look at the 10-year, as I already mentioned before, the 10-year um, on the week was up a bit. On Friday, the 10-year was down 0.44. We already reviewed the weekly market timing model, but you could see the green arrows remain in place, so we're in a buy mode. And again, that doesn't mean all in buy everything, because you got to take into account the full context, which is a heavy earnings week, a Fed meeting, and some other news. So my conviction is not massive here, although it's not saying the market's going down. So I like ratio charts. This is one that looks at TLT versus the spider. With this down here in the lower right hand corner, it's not telling me to be worried about a recession right now. This is equal weight versus cap weight on the spiders. If it's pointing up, there's strength in the equal weight. Pointing down, it's the large caps. Notice it's pointing up. For a long time, the large caps have been leading, but we're kind of trending higher now, suggesting the equal weights are showing some strength. The same thing here on the Qs. I like to look at semis, the broad-based semis versus a large cap SMH, and you could see that for a while the broad-based have been doing well. And then the 50 versus the FANGs, it's been all about the FANGs. The 50 bounce around the bottom there. The S&P sectors hourly give me a sense intraday of what's going on in the market. So we know what's been leading for months has been communications, Technology, although it doesn't look horrible, communications does. Technology is way off the highs. And look at discretionary. Now, on the stocks and docs, I've been looking for what we finally got, which is the staples, real estate, utilities, and healthcare to show strength. That's what you see in a defensive market, and I think what you're seeing here is market rotation into those defensive sectors. Looking at the rest of the markets, clearly financials, energy, materials are off the mat, and industrials is probably from a longer period of time has showed some performance. But staples look interesting here, kind of similar to that hot stocks. Next thing I like to do and is to go into my bullish scanners. And we're going to talk a little bit about my tools today in wealth charts and why I'm so happy with what we've done here. So first we'll start with a heat map. Here's the Russell 2000 heat map. Takes a few seconds. Lots of weakness, but it's not all red. Okay, on Friday, if we take a look at the S&P 500, you could see the large cap ones on the top and on the side are red, and the rest of it's pretty green. And if we look at the NASDAQ 100, which was the underperformer, you'll see a lot more red. But again, it's the big guys, not the smaller guys. Now there is some what's the word? Reallocations in the NASDAQ 100. I think they're going to try and shift some of the weight to some of the non-mega cap techs. So that could cause some disruption on Monday and Tuesday. It'll be interesting to see if that helps or hurts, since it's the broadening technology that's doing better right now, and the big caps are doing less, pushing more weight to the non-megas may actually cause the NASDAQ to have a positive response. If we look at Wealth Scanner, which is my favorite way of looking at which industry group or sector are leading, um, first thing I look at the scores. 850 is the max, and I have a couple at 840, but notice we drop very quickly. If you looked at this a week ago, 2 weeks ago, everything was above 800 in this column. During last week, it eroded some, and this has eroded a lot. So financials, XLF, KRE are leading KBE. So this is all about banks and financials, which are recovering. The diamonds, which has been the leader, here's your healthcare, agribusiness, gasoline is strong, dividend players, commodities, here's your staples, and oil. So we can see that there's no semiconductors to be found. There's no social media to be found. This is a significant change over the last couple of weeks. So we might want to look at financials. We might want to look at healthcare perhaps as sources of interest. Now, I'll tell you a little bit about my CAT scanner. So I have been trading, is that the right word? I've been swing to position trading, so it is the right word, since the 90s. I have found certain characteristics of stocks when they begin their moves. Now, not every stock that goes through these characteristics is going to have a big move, but very few stocks that had big moves did not have a number of these characteristics. So I've distilled some of the momentum changes that led to big runs into what I call my dots. Those dots include gaps, volume, breakout, and momentum. I combine that by looking at current OBV versus a moving average, relative strength versus a moving average, and I look at trends. And then I try and find stocks that meet a couple of my favorite different um, patterns. My favorite pattern being a pullback in an uptrend. So let's just start with looking at financial stocks. So here's a broad list of financial stocks, and let's rank them by dots. This is my scan that's pullbacks and uptrends. And stocks that meet these criteria are going to come up to the top. So what are those criteria? Stock is in a longer term uptrend. It pulls back on the shorter term time frame, and then the shorter term time frame reverses back to an uptrend, and when that happens, I get some of my impulse or momentum indicators. So ITUB is an ADR, so I just want to point out the pattern. Now ADRs are almost by definition gappy because they're trading somewhere else typically, and then they're resetting the price at the open based upon where it traded before. Clear cut uptrend. Here's your pullback, and here's your breakout. On the weekly chart here, you could see it's been in an uptrend. This is the weekly bongo here, and the weekly bongo is the middle bongo here. The daily bongo had gone to red during the pullback, and it flipped to green as it went into a new uptrend. It had three of my momentum indicators, which are volume, which is strong, a breakout from prior closes, and momentum. And you could see here relative strength is stuck above the average, and so has OBV. So I don't know anything about this. I don't have a lot of foreign banks in my portfolio, but that one looks interesting. Now, last week we talked about one I do recognize, and you'll probably recognize as well, which is Bank of America. Now, if you have my tool set, you're going to notice that I've been using the standard symbols in the program. Yes, they'll work with the tasty symbols as well, but I get more data with the standard symbols. So last week we talked about Bank of America. It had a very short uptrend, a pullback, and a breakout, similar to what we just talked about. We talked about my stocks and docs. Great volume. You could see on this date, the 18th, which would have been Tuesday, you had a gap, volume, breakout, and momentum. The picture I like to see in relative strength and OBV, and that one did very well. I don't know this one either, but this one has an interesting pattern. Yes, there's a relatively short-term uptrend, and you can see the weekly bongo had turned green. Here was the pullback in the daily bongo. Look at the strength in relative strength in OBV and a pretty massive breakout here on Friday. Now, I would study the fundamentals and recognize that this is the 200-day moving average, and that might not do well for the stock. Apartment income REIT, kind of in a congestion zone there. Agree, Reality Corp has broken out and starting to run as well. Um, this is the day it showed up on my scans, and I didn't chase it or go after it. And the reason why is because it didn't really have much in relative strength. And like the SFBS, I don't like buying something right underneath the 200. Um, Axis Capital Holdings is another one that has broken out. But again, the similar story here, it's right underneath the 200. Now, this one should not be under financials, but this is a stock that I like a lot, which Elanco Animal Health. It should be under pharma, so I don't know why it's sitting here, but I wanted just to show you that this one we talked about a week ago, or maybe, yeah, I think a week ago. It took out the 200, which is incredibly bullish, went sideways and had another move on Friday. So ELAN is one that I like. Now, I could also look for stocks that are rockets going straight up. Now, I don't know if we'll find any here, but let's look and see. So ITUB was one. American Homes for Rent is another. Obviously, it's not straight up, but it's pretty straight up. Look at the weekly. Now, the problem with stocks like this is if you look down here, it's 99.51, and that's my personal proprietary indicator based on some work of Ian Woodward, the high jump, that gives me an idea if I'm extended or not using math. And we're pretty extended right there. Aon PLC had a big move here, pull back, and now it's moving. It only had one dot. The relative strength isn't doing anything. Momo up would say, I don't really care about anything, just show me dots. And so we could see if anything else new has come up here. Um, Another foreign bank. This one looks interesting. If you like foreign banks, uptrend, pullback, looks like it's moving again. It is not extended. I'd like to see more relative strength. And then lastly, I call bottom poppers. These are things that are destroyed that the weekly bongo is negative still, but they have momentum coming in. And NDAQ, you know, it maybe goes a lot higher, but it's got to get through the 50 and the 200. That one doesn't do anything for me. So on first glimpse, looking at the financials does not show me a whole lot of interesting things. Now, energy has been moving. So look at energy and let's do the same thing. Stocks in an uptrend on energy all. Water solutions, this is one that I liked. Nice uptrend. Here's your pullback. You see that there. Look at relative strength in OBV. Three dots, massive volume. This one looks like it wants to go higher. Imperial oil, a lot of the oil companies look like this. You saw the price of oil on my commodities review. With strength in oil, you might expect some of these plays. And if you want to see what's really strong, let me just flip to you, show you gas real quick. Look at gas. That's going to pull up refiners and retailers and may also help oil producers. So IMO, Imperial Oil, looks like it's setting up nicely. PXD, Pioneer, is unfortunately it's below the 200, but you could see relative strength and OBV are turning up. DK is one of the refiners, clear of this 200. This thing could run. It's got a lot of earnings coming in. And a lot of these are like Hess, Imperial. Um, some of them are producers, and some are going to be producers, refiners, etc. I've got a position in YPF, and it's sort of been going sideways. It'll be interesting to see if it catches a bid. Now, again, rockets, anything going to come up to the top, just ranked by dots? Not really. Baker Hughes, this is long gone. I don't like chasing. You can see the high-low jump tells me that. RNW, Renew Energy. Wow, big move, cheap stock. Might be one to take a look at if you like cheap stocks. All right, so that's energy. And then another thing I wanted to look at is staples. Is anything moving the staples? And I like Kimberly Clark here. Let's see if it's going to meet any of my patterns. Um, Nothing really. See Costco here. Big run. Yeah, sometimes the thing slows down. So let me just do this. I don't really want to do that, but I'm going to do that. So reboot it here. So in my opinion, if you want to make money, you want to buy stocks that are in the industry groups that are leading. So I always start by looking this way to see if I can find anything. We're going to go to what Jim Ropel calls it the candy, the stocks that are exciting, whether in the top industry group or not. I'll make that irrelevant for that analysis in a minute. But I just want to go back to staples because there were some staples that looked good when I looked at my charts this weekend. So back down to consumer staples. Again, not much showing up on the pullbacks. Procter and Gamble is one that's broken out here. This pays a decent dividend, relative strength, trying to peek its head up, coming out of a squeeze. Um, Walgreens Boots Alliance, to me, it's just going to fail at the 50, so I pass. Colgate Palmolive broke above the 50 with the doji. Costco, this one looks like a big leader here, and it continues to run. It's off 610, its recent highs. Could this one continue to run? Sure, especially if staples lead. And Pepsi's another one that might pull back in an uptrend pattern. Here's your pullback going higher here. Now, let's just see on the rockets, because some of these have started moving already. Not much there. Momo up. I wanted to look at Kimberly Clark. So it's got to get above the 50, but two dots coming out of a squeeze. I like to see relative strength in OBV. So not a lot of things that are just blowing up here, are there? And those are looking at the leading industry groups. Now, staples, financials, energy, well, they're not the cha-cha-cha, rah-rah-rah fast movers, so maybe I'm not too surprised. Let's go into the cha-cha-cha stuff. Let's go to my combo stocks. So these to get here, these are high relative strength. They're leaders. Somebody puts them on a list of top stocks. They show up on some of my scans. And let's look at pullbacks that are uptrend. Let's rank by dots, and let's see if there's any quote candy. ANX, AXNX, Exonics looked very interesting. Now, it is three dots. Look at all the green dots coming here. So there's a lot of positive momentum. Look at the relative strength in the OBV. The downside is it's 10% away from its 200. Inva, Innoviva is a healthcare stock. Uptrend pullback, breaking out above the 50. Again, lots of green dots, relative strength in OBV. This one looks interesting. Here's that bank. Myriad Genetics. Um, Unfortunately, I know this company well. It's in a space that's become a little bit commoditized, the genomic testing, but a lot of the companies in this area are starting to look interesting. I think there's others I like more. PAGS, old story here. You can see this is a stock that's been beaten down crazy from 62 to 10. Look at this, taken out its 53 dots, good volume, relative strength, and OBV. That's what I'm going to be following this week. Quidel is another one of these testing companies. A lot of these companies did really great during the COVID because of all the COVID testing. This one is showing some movement here. It's still in a downtrend. Talking about downtrend, STNE. This is a stock that's been beaten up forever. And, I just get the sense that this thing has changed and it's starting to go up. Broke out above the 50 on Friday. Volume, breakout momentum. Relative strength and OBV look good as well. This is probably one of the best charts I've shown you. This I showed you first, which is WTTR. Water Solutions here. That looks interesting as well. I hate to say this, but if you want to find other stocks that look good, how about utilities? Why do I hate to say that? Because when utilities are doing well, that doesn't say great things for the market. And I saw a number of these that looked interesting on my review. Look at Southern Company. Breaking out of congestion massively, had an EMS and a well signal, which are other signals. Look, relative strength at OBV, three dots. NEE is another one, has the 200 above it, so I like Southern better. Avangrid, again, breaking out below the 200. Detroit Edison, which was the first stock I ever bought. I took my bar mitzvah money, which I wasn't allowed to use. I bought Detroit Edison because it paid like a 4 or 5% dividend, and I got to keep the dividends. The rest went to pay for college and med school. Even FE further down here is breaking out. So utilities look especially strong. Okay, so what else do I want to finish with? Let's go back to consolidated buys. Notice how fast I can make the leaders come up to the top and make decisions on them. I love this tool. Scott Rockets, Roper Technologies, expensive company. 100% on the high low. I don't chase, although that's a pretty impressive move on good volume. Here's that iTub. Here's that PAGS. Qualcomm, one of the few technology stocks that held up. Pull back and then a positive massive volume. I wonder if it had earnings come out. Outperform 145. So the earnings are here. Projected around August 2nd. SBS. Airbnb is another one that's a rocket. You can see straight up. How about bottom poppers? Anything look interesting there? Takeda. Here's a stock that had a great move to pharma stock, and right now pharma stocks are looking pretty interesting. Pull back into the 200 and is showing some movement. That's not the kind of stock I like to buy. I'd rather buy it when it's breaking above the 50. To me, it'd be higher risk, and that's a higher price, but more likely going to go up versus this, it's more likely to fail. In Illumina is a stock that it and A, which we'll look at in a second, these are beaten down. These are the big guys in genomic testing for cancer care, Illumina. Volume, dots, something to keep an eye on when you can get, sort of a fallen angel. The stock has gone from well over 500 to 190. It is a leader. Another one that reminds me of a similar type of a pattern is Agilent. and Agilent has actually started to break out. Still got the 200 above it, but I like this one as well. Look at the volume here. Now, I'll take you to the stocks that I curated down that I'll be watching on Monday. I have a long list and a short list. I think I'd rather be cash or long. I'm not going short here, although I did buy some SQQ middle of the week when I saw that topping look on the Qs. So my buy watch list, first let's just look at the watch list. We'll have a number of these stocks that we talked about. Let me see if there's anything here. Abcom, I love this pattern, a big run up, a flag. And so let me just draw the line. I would not buy this stock unless it takes out, kill that one, this trend line. If this takes out this trend line, then I think the stock will be something to buy. I like the pullbacks, I like the flag, and we'll see, you can see the strength on the weekly. A lot of these we've looked at already. Um, this is combo leaders. That's not my buy watch. My bad. Here's my buy watch. This should be okay. So there's your ABCM. I knew that was good. There's the Agilent. Sorry about that. This one is bucking the trend. This auto stock looks good. Most of the other auto stocks are on my shorting list, but big gap up, may make a run at prior highs, which isn't that far away. Massive volume. Look at relative strength and OBV. And would you have liked to have found it down here? Well, you could have. Two dots here. Relative strength and OBV looked good back then. AVTR, I think I looked at it already. This is a med tech stock. I love the pattern. Break, test the 200, ready to run. Looked at Elon. Insight is sort of a higher risk, but I find it an interesting story. Let me see if I can show you why I'm interested here. So this is a stock. Let me give us a little bit more time if I can. Notice that we're in an area that it's reversed every time. So here's a stock that's at a double, triple bottom area. Obviously, that's not perfect, but if if I make a little bit wider line there, it's broke above the 50. The 17 is about to cross the 50. It's got a fairly long runway, 15% to that 200. Relative strength has popped above its moving average. OBV is coming out of a squeeze. So I like Insight. Now remember, none of these are recommendations to buy. They're just things that I like and I'm going to be watching. Here is another refiner that should benefit from the high gas prices, a breakout here out of congestion that occurred on Friday with relative strength and OBV looking good. Repligen, big move. I'd have to look at the news and understand what happened and what's it tell me here. 185 target. Well, I'd have to know more than that. And then how about Starbucks? If you want to look at a staple that you recognize that is coming off of the 200-day moving average, which is pretty safe to buy typically, massive volume, breakout momentum, relative strength and OBV picking up. And I think that's enough. So what have we done? We have gone through the markets and we said that the markets look like they want to, well, I'll back up. The markets are in a buy mode by my weekly market timing model. I talked about my conviction being a little bit lower because of the Fed meeting and all the earnings. That could be fuel to push the market higher. It could also cause the market to pull back. Hence, my conviction is lower. We looked at what's rotating on the industry groups. I talked even at the title level that we have market rotation here. So staples, utilities, energy, and healthcare are rotating in. We looked at each of those. We found a couple of interesting stocks in each of them. We looked at healthcare and a little bit more detail, banks, etc. I think that we'll have a lot more information a week from now. To me, I don't like events. I don't like things like earnings that I don't know if they're going to help or hurt. Binary. I don't like Fed meetings because the commentary can help or hurt. So my conviction's lower. I have some cash. I am invested. I took some profits last week. I have one contra, the SQQQ, just in case, but that may be a mistake with the um, allocations of the NASDAQ 100. I hope you have a great week trading. Please know when your earnings dates are. Nothing is worse than the market closing and seeing a stock that you own drop 20% because it misses its earnings. And then looking back and realizing from a seasonality perspective that that was predictable. I'll talk to you Monday on Stocks and Docs, and I'll see you next weekend. And again, those that own my marketplace package will be doing this live on the 29th at 10 in the morning Eastern Standard Time for 3 hours. Those that have my package will get my layouts, my um, watch list, etc. Have an awesome, awesome week in the markets, everybody.